So, welcome to chapter 2. We're going to start really digging in and doing some accounting here. So, I hope you've got your notes printed out. You want to really engage with the content. When we get to where we're doing some journal entries, you're going to want to pause the video, try the journal entry on your own, then restart the video to check your answer and make sure that you're doing it correctly, listening to the explanation. But remember, the more that you engage with the content, the more that you really participate, even though it's on a video, the more that you participate, the more that you will make those fingers grow that I talked about in that orientation video, and the more that you will really get the material. So we're first of all going to talk about what is a T account and then how do we foot and balance. So when we talk about accounts, let's keep in mind what an account is and an account is not. So assets, liabilities, equity, expenses, revenues, those are account types or account categories. So when we're talking about an account, we mean a specific asset, a specific liability, a specific equity, a specific expense, a specific revenue. So a lot of times I'll ask which account is used here, and in class I'll get the answer of it's an asset. Yeah, but which asset? Specifically which asset? So cash is an account, accounts receivable is an account, furniture is an account, vehicles are an account, equipment is an account, accounts payable is an account. Service revenue is an account, fee income is an account, rent expense is an account, supplies expense. So all of these specific accounts are the accounts within the categories. So every account has its own separate a way that we keep track of it. So if you think back to, if you've ever seen any old movies, specifically I'm thinking of like A Christmas Carol, and I mean the old ones, where you see Bob Cratchit and he's sitting at his little desk and he's surrounded by all of these big leather-bound books. Well, a lot of those books are what we call ledgers, and ledgers are where we keep all of our accounts and what their balance is. So imagine if you opened this book and on the first page of the book would be cash, and you would have all of the money, the cash that you received and the cash that you spent. It's all recorded, so you know the balance. And then you flip to the next page, and maybe it's accounts receivable. And then the next page maybe is office supplies. So we have these ledgers that we keep. Now, today, these are kept in a computerized environment, but if you want to think of them as a book, it's a little bit easier to think of that way. So each account has what we call a T account. So if we think about now, there's a fancy form like you see here on the page, and then there's just the simple T that we actually see here, where we've drawn a T and we write the account title at the top, so maybe cash. And the left side of the T account is called the debit side. Now, debit does not mean good. Debit does not mean bad. Debit does not mean increase or decrease. Debit does not mean that we spent money. Debit simply means left side. The right side of the account is called the credit side. Now again, credit does not mean good, credit does not mean bad. Credit does not mean debt. Credit does not mean we spent money. Credit does not mean we got money. Credit simply means right side. Now, someone told me that debit and credit are actually the Latin words for left and right. Turns out that's not actually true, but that story makes a good story because they really do. I mean, if we think about it that way, that makes sense. Now, these debits and credits were named by Luca Pacioli, who was a Venetian monk in 14th century Italy. And he's considered the father of double entry accounting. And he wrote a textbook on mathematics, but he included a chapter in there for the everyday businessman to keep track of their money and their business, and he set out this ledger format where we have debits and credits. So debit is actually short for debenture, and therefore debit is abbreviated DR. Even though there's no R in the word debit, there is in debenture. So when you see it abbreviated DR, that's why. And then the right side is credit, is CR. So we abbreviate those DR and CR. Now, one of the hardest things for you to learn is to just keep in mind that debit and credit just simply mean left and right. I always tell students, if you'll take a Sharpie and on your left hand put a DR and on your right hand put a CR, we're going to literally use these as directions. So instead of telling someone take a left turn up here, you're going to tell them take a debit turn, right? Because our minds tend to think debit means debit card means I spent money. But that is not true. We tend to think credit means debt, means we used our credit card, we have debt. That is not what credit means in accounting. So we're going to use debit and credit as adjectives to describe the sides of the account. We're also going to use them as verbs. We're going to say debit this account, which means put it on the left side, or credit this account, which means put it on the right side. So to determine the balance of an account, you'll simply add up all the debits, you'll add up all the credits, you'll calculate the difference, so you'll subtract, and you put the balance on the largest side. So in the example we see here, we have 2 debits in this account that total $5,600, and we have 2 credits that total $900. So we've written their totals here in kind of small letters. This is called footing. Footing just means writing the total of the debits and the total of the credits there. That's not the balance in the account. That's just writing it there. A lot of times you'll see it just written out to the side. So a lot of times instead of it showing like this, we'll see, hey, we've just written real small out to the side 900 and real small out to the side over here 5,600. That's footing. That just helps us calculate the balance. So 5,600 minus 900 gives a balance of 4,700. Since the debit side is the larger side, the balance goes on the larger side. When the credit side is the larger side, the balance goes on the credit side. Now, we don't show positives and negatives in the account, okay? So we're not going to say this is a negative balance or a positive balance. We're going to say this is a $4,700 debit balance. And whether that is a positive thing or a negative thing depends on the type of account that we have, and we'll talk about that in the next video.